What's up, people? Welcome to this episode of the Buy the Hood podcast or webcast because I don't know how you're consuming this content. I'm your host, as always. My name is Jimmy. And as we start off every show, that's with gratitude. Just want to say thank you to all the supporters of everything that we have going on. Special shout out to all the students of Buy the Hood University. It's still growing like crazy. I know I say that every week, but we literally have a ton of students coming in on a weekly basis. Just want to say thank you to all you guys. Shout out to my brother Corey, who's not here today. He's out handling business, but the show must go on. Shout out to my brother Kamari, the finance rebel, for this amazing gear right here. But yeah, listen, it's your guy, right? Yeah. But our show is designed to highlight brothers and sisters who are doing amazing work in the community. And this show is like others. We have someone who's doing powerful things with infinite banking is a concept we haven't talked about on the show yet. So I'm definitely looking forward to this conversation. We have Curtis May on Money for Life. Curtis, how are you?
I am doing great. Thanks for having me. Excited to be here.
Absolutely. I'm very excited. We were having a conversation before we went on. I met Curtis years ago when I was in, securities and insurance. And I was reminding him, meeting him back then. So he's been in this game for a long time. Helping families out and helping families to create wealth and protect themselves. So Curtis, let's start with your background. Can you tell our audience a little bit about you? So where are you from? What city, area?
I'm from Philly. Grew up in Yorktown, 12th and Master. Hey, what's up, Yorktown? And I went to. So what's interesting is I think I'm a third generation entrepreneur. So I went to school. I ended up. Didn't go to private school, Philmont Christian Academy, and then I played ball at a Christian college up in New England called Gordon College. Got mad at my coach, transferred to Winston-Salem State, and got my insurance license in college when I realized here I am barely on the team, and the NBA was not looking for 5'11" shooting guards. So I need a new plan. Fortunately, I've heard from the time I was 8. You'll never make any money working for somebody else. So even though I was a business major, I thought you majored in business to go into business. It didn't even occur to me to get a job because my dad told me you never make any money working for somebody else. So that wasn't even a thing in my household. We're most taught, go to school, get your education, get a good job. I was never taught that.
Okay, so let's talk about it. You said you come from a family of entrepreneurs. So that was instilled in you as a kid, right? So you never even thought about getting a job.
No, I always viewed a job as I remember reading Creating Wealth. A job was now I've had jobs, but the longest I've worked for anybody was like 13 months.
Mm-hmm.
Okay, and because I wasn't any good at this yet, so you gotta, so you have to supplement it because I wasn't any good. But I never I didn't want a career. I never really thought about that, going the corporate route or work for somebody else because, that wasn't what we did here. My grandfather was in business. My family owned a supermarket at 25th and Ridge in North Philly growing up. And we owned a couple of bars in Philly in my late 20s. I think I got involved with one of our bars, and this is where the gray hair comes from. You can see the gray hair. I came from the bar.
Yeah.
I'm gonna get robbed at gunpoint 3 times a year. We were both in North Philly. So, and I was managed. It was like a baptism by fire, but so when I work with a lot of business clients, they know I feel their pain because I've had to deal with L&I and cash and running to the bank and looking at the bank account in the safe, hoping that you can make payroll the next morning. Yeah. You know what I mean? That kind of stuff that politicians, let me start with them, don't know nothing about. Every time they want to talk about raising minimum wage or whatever, it's like, okay. I had one time I got in this argument with this person that was running for lieutenant governor of Delaware. I was like, you think paychecks come from some magic direct deposit machine out of the sky? You mean somebody's got to make money to be able to pay all this stuff, Yeah. And they just don't get that concept of economics, capitalism, and what makes the country work. And one of my big passions is teaching our people the game. It's hard to win a game you don't know the rules.
These are facts.
And so there's a rules to the acquisition of money, and so money's not attracted to you if you have a disdain for it. You
I
know what I
like that
mean?
one.
Money don't mean nothing. I make money, money don't make me. Or you deep down think money's evil, or you have a problem when I say profits or capitalism. You're gonna be broke. I'm gonna tell you right now. And so
No, that's interesting
my
though,
nickname
because
is the contrarian, right? So I kind of keep it real on when we talk about
no, listen, that's interesting though, because sometimes you think that the people who are in quote unquote in power have a certain level of understanding, but when when you start to talk to them and meet with them, you recognize they have no clue
oh, they have no clue.
when it comes to economics and even technology. Oh my God, with technology, you try to explain something technological, it's even worse. Like, so, I'm glad you said that. But moving to your journey, so after you got your license, what was your next step after getting your license?
So I came home. And it's funny. Well, sidebar. I sold timeshare for like 9 months and wasn't any good at that. I moved to Virginia, and because I wasn't any good. So fast forward, Curtis 19 circa 85 is still, but I can be. My kids don't believe me, but I'm introverted. So I'm not like terribly outgoing. So I'm not the sell ice cubes, the Eskimos type guy. You hear about that?
Mm-hmm.
I'm not that person. I don't like walk up to people, hey, how you doing, and meet people on the street and get their cards. I was never that person. Okay, I've never cold called in my life. I don't like that. And so most of my journey was, and this is why I'm such a big believer in personal development,
Mm-hmm.
because I've probably read at least a book a month, but really probably for me it's 2 to 3, so even a book a week if I'm really trying to learn something, since college.
Okay, nice.
And so I'm more self-taught because I can't think of anything I used in college that I use now. I learned more from my dad than I learned about business than I learned in school.
Nice.
So that was a journey. So I think it was personal development is I can, how to win friends, influence people, think and grow rich, Tony Robbins sales courses in the early of my career where I was learning about sales, Zig Ziglar. Now I don't even read that. I realize what business I'm really in is the marketing business.
Mm-hmm.
But then it was just getting better at communicating with people and getting my message out there. So I would practice. It's like basketball, I read George Gervin shot 600 shots a day. I shot 600 shots a day. So
Yeah.
I was a pretty good scorer back in the day. When they had peach baskets for but I could shoot. Well, I should be able to shoot. I just shoot 500 shots a day.
Yeah,
So if
you
I
put
was
you put the
squared
work
up
in.
and it was open, it was going in. I need to follow my shot. So you have to I apply that to business.
So what was it about insurance though? What attracted you to the insurance business?
It really wasn't about insurance. I actually at the time it was I was I here's how I got in. A person showed me a check for I was in Amway
Okay.
and a person showed me a check for $400 and said this is what I made for an hour's worth of work. And I said, doing what? So he showed me this little flip chart and I was like, that's all you do? And it was interesting. And I had, I'd had finance, I'd had some stuff, and I had learned more about money and talking to him, going to a meeting, and then I remember working on some paper in the basement, and I was in the finance section, and I took a sidebar and spent an hour just going through all these books about money. So I've always been interested in money. Okay.
Mm-hmm.
And then it was like buy term investor difference, all this stuff that I understand now is completely wrong. But you don't know the other side of that. But I'm very crusade oriented, right? So I'm very passionate about, changing the world or righting wrongs, so to speak. So when I first saw it, I was like, wow, people are getting ripped off. They don't know anything about money. When I got my investment license, this is early 90s. I was excited about getting our people, in the game, so to speak. Because, in the
Mm-hmm.
90s, everything went up. So I had people that made money that time because Curtis was their advisor, and I had a knack, I was told, for making things simple so that they were comfortable and they understood it. Because I've always considered myself a financial educator,
Okay.
and that's kind of how I approach it. Because I always tell people, look, it's your money, it ain't Curtis's money, so it can't be more important to me than it is to you. So I've always been that way.
Mm-hmm. Let me ask you this question. So, your journey throughout insurance, because you just mentioned how, when you first started, everybody knows where that phrase comes from, buy a term and invest the difference, and how you recognize the flaws in that. Can you explain us your journey in terms of starting there and
Hmm.
now you're in, your infinite banking. So before we describe exactly what infinite banking is, tell me your journey about discovering the ways that insurance can
Yeah,
work.
I stumbled on this little purple book called Rich Dad Poor Dad,
Mm-hmm.
and it's funny. Everybody I talked to on my show, that if you talk to them somewhere in their lineage, that book is in there. And so
Yep.
I read Rich Dad Poor Dad, and then I started to realize, okay, what he's talking about and what I'm doing are different. And I'm the type person, I go deep. See, like, I don't just read it. Most people read it and have no idea what it's about. It's not very tactical, so they just move on to the next thing. And it's really at the core a book about accounting. So once I finished Rich Dad Poor Dad a couple of times, it was like, you ever see the Matrix? You see at the end of the
Yep.
Matrix when Neo could see the Matrix?
Yeah.
That's how
I talk about that often on the show. We talk about people having their matrix moment when they recognize just how things work.
that was my Matrix moments. I understood financial statements because I didn't like accounting either at the time. And then I realized everything was financial statements. So if I'm talking to a client, I literally can picture the money flowing through their assets, income, expense, asset, liabilities, their financial statements. I see it, like the movement of money. And
Mm-hmm.
then we got to change some stuff because, see, most people don't read numbers.
Yeah.
Financial literacy is accounting. It's the ability to read numbers. It's not investing. Okay.
Mm-hmm.
And so anyway, I got that. I read a little book by on one of his tapes. I heard this woman, Kim Butler, who's I'm part of an organization called the Prosperity Economics Movement, and she said something: rich people don't buy term insurance, is a waste of money. Now, that's what I remember, because everybody needs term insurance. There's nothing wrong with term insurance. Okay, you need both.
Yeah.
And because if your goal is the most coverage for the least amount of money, then you need term.
Mm-hmm.
Okay. And it's because it's not the product, it's the strategy. But that being said, I heard her, I kept listening to that, and then I discovered this little book called Becoming Your Own Banker.
Yep. I'm familiar with that too. That's another
And
good one.
I don't even know how I got it, because it came in the email. This is like 2001 or 2. It was like, what is this? And I didn't understand it because I still was in this other company. And it took me 4 or 5 years to like deprogram myself from that.
Okay, got you.
So even after I left, I was like, I wouldn't let it go. No, this is, a whole life is evil. And so I'd read a bunch of. It wasn't easy. I had to let certain things go. So it was a progression but I was doing it. I was working with people, and then when you start to study what people with money do, they
Mm-hmm.
don't do any of the stuff that you're seeing on TV or that the financial gurus teach.
I'm glad you said that. Because all right, so I read that book years ago. As a matter of fact, I think I might go back and read it. I always like to go back and read things. Second, third time. That was what's the guy? Nelson
Nash or Nelson
Nelson
Nash.
Nash. Nelson
Mhm.
Nash. Yeah, it was Nelson Nash, Becoming Your Own Banker. Yeah, that's the one. So it was that book for me, and also Last Chance Millionaire by Douglas Andrews. Um, which kind of gave me a different perspective on the ways that insurance can be used. And but I totally understand what you're saying when you had to
Yeah.
deprogram yourself, because
I
if
was
you're
this close to joining Doug Andrews. His name is Andrews Team. It was called
okay,
Team, actually. And
okay,
then that's when I was telling, we were talking before we recorded, I
yeah,
understood the difference between accumulation and utilization. And
mm-hmm,
utilization, or velocity of money, was better.
yeah,
Right.
yeah,
And so that was the difference. So it's really not about the insurance. So if you say what I do now, just to clarify, I teach, and I'm a trainer in something called principles-based planning.
okay,
Okay. And so what happens is, what I take people back to, most people don't have principles, like an operating system to help them make financial decisions. Right. And so there's principles, there's strategy, and then there's tactics. Right. And so most people don't, and most advisors have no principles. Right. They're they're tactical, not principles like they're not bad people, but no
I got
financial,
you, I got you,
right?
I got you.
And then they're tactical. A tactic is a product you buy. So most people are tactical, maybe some strategies. They'll have like tax-free retirement. That's a
Mm-hmm.
strategy based on like universal life, overfunding it. Kind of, it's like they call it the rich man's Roth IRA. You could pull money out tax free. But see, to me, that's still based on a financial philosophy we call the accumulation theory in our system.
Okay.
All right. And so when you're hearing the accumulation theory, here's what you hear: buy and hold, dollar cost average, get out of debt, rule of 72, portfolio rebalancing, buy term investor difference, all of that. The S&P, the stock market is the center of the universe, and you're hoping that you buy low, sell high. But in a world where you've got minimal rates of return, you've got a volatile markets that's really driven by the Fed, and you've got a dollar that the longer you hold it, the less it buys. There's so many moving parts to just, you saw, I got $1 million, which is not enough, by the way. But does that $1 million buy have the same purchasing power if you retire 15 years from now than it does today? You see what I mean? So there's so many moving parts. It's more than just a number you see in your account. And then if you got $1 million in your account and it's in a traditional account, just take 30 to 40% off of that, because that's Uncle Sam's money, right? You just seen the one. So it's all of that stuff. And see, most people don't know. A lot of advisors don't know that, especially ones that work in these, part-time things. And so I'm sorry, I'm throwing people under the bus. And
no, it's all good. Well,
right.
because, and I'll tell you why. As someone who's worked in that space, it's because a lot of times, it's not about the studying. You get the licenses, and you go to work in these different shops, and you're just a salesperson, right?
And a recruiter.
Yeah, salesperson. So you don't understand how, and that's one of the things that bothered me about the finance industry is that the one thing I've recognized is, and I say this a lot of times, is there is no one size fits all approach. So a lot of folks have these, the things that they practice, right? And they mean well, but that's what they practice.
Right.
And that might not be the best thing for someone's specific situation. Everybody has different situations, whether, we're talking about whatever kind of debt they're in, what their income is, so that whole one size fits all approach is can be problematic. But anyway,
that's why you have to have principles, right? So, and so when we talk, like what I teach is the 5 principles of personal finance, right? So I'll just run them through real quick. We can stop anywhere, but principle 1 is to save 15% of your gross income. So savings is not the 401k. That's safe, liquid. You can use it. You have control. The second principle is maximum protection. So as you look at your life, auto, health, do you have entities? Do you have a will? Do you have, human life value with your life insurance, disability? Most people skip that step because that's not sexy, right? But those are principles. So you have to protect the kingdom. You got to save, right? Third, you got to make sure you have legacy, forward placement of assets at death. 4 is liquidity, right? So I teach people, listen, and COVID has proved this. I want you to have 3, 6, 12 months of your income in cash, okay, in cash equivalents, right? This is where infant banking comes in, right? But what happens is, the principle is liquidity. See, the number one problem people face, especially our people, is lack of capital, lack of access to capital. I say capital because because people say when you access to capital, they won't loan us money. We can't get loans. No, loans are debt. Debt and loans are a trap. That's bondage, right? You need capital. See, if you have money, opportunity. If you have money, you got good income, you're a credit investor, opportunities will find you. You don't need to go looking.
Yes, sir. Yes, sir.
You know what I mean? And so what you got to do is you got to capitalize yourself. See, everybody teaches you to invest. And so you're investing in what the masses invest in. And you're investing in things for people with no money. What the hell is $200 a month in Robinhood going to do? And you're in brokerage accounts and you're trading, so you're not even investing, you're speculating. Really, truth be told, right? And so you got to be liquid. And then once you're liquid, now you can invest. And the difference is the 5th principle is velocity, right? And so velocity of money is the opposite of the accumulation theory. And where do you invest? You're creating velocity. Like if you're in real estate, that's the Burr method, right? That's velocity. If you're, people that do options are creating velocity. You buy businesses, you're creating velocity because you're What does Rich Dad say? You want to develop assets. So what's an asset? Something that puts money in your pocket. That was profound for me, right? Because everything I was taught was capital gains. I want to get $500,000 and $1 million. I could get 10% on these mutual funds and live right off into the sunset. And that's complete nonsense. And you want to focus on leverage. See, rich people use money as debt is money, because you're using debt to acquire a real thing that throws off income every month, right?
Mm-hmm.
Tax advantage, tax free, right? And then they use permanent insurance. See, banks store their cash in life insurance. Okay, Bank of America is the number one buyer have billions of dollars of whole life. That's where they store their tier one capital, right? And so, but the funny thing is, that strategy, that philosophy works in personal finance and is safer. I was on the phone with this guy that manages like the $35 billion for one of my primary insurance companies. And they don't buy and hold. They don't care about the rule of 72. They don't care about the magic of compound interest. They buy businesses. They create velocity. They buy spread. They might earn, 2% on this and buy it at 2% and earn 4 or 5% spread. I mean, it's a completely different mindset.
Well, yeah, because what they're doing is they're becoming their own bank. Now, what I will say about understanding the rule of 72 is just knowing how long it takes for your money to work for you, right? So even
that's
as a bank,
the only thing.
That's
understand what I call the velocity, and also understand inflation, how fast your money is losing value, right?
Yeah, those things are important. Those things.
And so the banking thing, we say, look, you can be a customer of the bank, or you can be the
be
bank,
your own
right?
bank. Yeah,
and so banking is a strategy. Right. And so what is the strategy? It's principle 1, save, because you got to fund it. Principle 4, liquidity. And principle 5, what you do with the money. So what I start, because if you just do banking, you can still have gaps in your financial plan. So
absolutely.
Speak, right.
Yeah, because you got to have protection. And you talked about those things in terms of like, and also how do you pass this to the next generation? That's also important. Not talked about enough.
Right. And so I don't want to mix. So what I realized when I discovered this about a year and a half ago, I was like, okay, and so just to be clear, when I talk about banking, I'm talking about properly structured dividend paying whole life with a mutual company. So if anybody that tells you, well, I do infinite banking and I use universal life, they're not doing banking. Okay. Because they're different. They don't work right. So I just want to get that out there like that, but not to go into, that's a tactic. See, that's
got you.
Tactic, right? So it's really the strategy, but what precedes the strategy are your principles, right? And so most people, you've got to, because see, if your principles and if your focus is, well, we call it in our system being a cash flow nair. So my goal is I want you to have asset-based income twice your expenses. Right. Okay. And so now if you're calling yourself investing and you say, well, all right, I heard Bitcoin is going up. What do you think about Bitcoin? That's a tactic. Right. Mm-hmm. And the question is, why? So you start with why. What is it that you're trying to accomplish? So do you want to be financially free? What is that? Passive income greater than your expenses. How does that help you do that? See, so when you start asking what you're trying to accomplish, then that kind of put blinders on and you figure out, okay, listen, is this going to get me from point A to point B, or is this a shiny object I'm chasing because I'm chasing returns and I'm not chasing cash flow, which is what will free you.
So you're talking about focusing on cash flow. Now, I will say this, though. If you get deep into the crypto market, understand you can't create cash flow with that, but that's a whole nother advanced
right
phrase.
But see, you're becoming, see, what are we talking about? Investing is not about buying something, it's becoming something, right? Mm-hmm. So if you know how to do
repeat that one right there. You said investing.
So investing is not about buying something, it's becoming something. So you need to become an expert. So somewhere on my YouTube channel, there's where I call it 3 rules of investing. One is invest in yourself. Like, so I have a show, you might know Camille has
absolutely.
Listen, so he's the crypto guy. That's my crypto guy, right? So I've interviewed him on my show. So Camille has been doing it 5, 6, 7 years. He is an expert.
Listen, Camille has been on here. Camille's someone I talk to on a daily basis. Because like Camille, I'm also a certified Bitcoin professional. So so the thing is, you know, I was just putting it out there that you can generate revenue, but and he knows how
Well,
to
he
as well.
told
So
me that. Like, I didn't know that.
yeah, oh
So
yeah,
for him,
absolutely,
it's not gambling. So for most people just, oh, I heard it because it's going up. Well, you don't know what you're doing. I tell him, go buy his course, right?
absolutely.
And because see, if you can't control it or control the outcome or influence the outcome, that's not investing, right? But if you know what you're doing, see, as your knowledge goes up, your risk goes down.
But I think that's an excellent point. And for the folks out there watching, Camille is a member of By the Hood University. So yeah, so we talk shop on crypto in there, but what you're talking about is investing in yourself, right?
Yes, that's your number one investment is you.
Which is more important than any specific instrument that you use.
Yes, that's what we teach. I teach our clients to invest in themselves, right? So your number one, I tell, look, your number one asset is you, right? And so you have to invest. And this is really, I can trace my growth to this principle. I didn't know this as a principle, but this is what I did. So you got to invest in your mindset, what you watch, who you hang around, what you listen to, what you read, what you watch, your skill set. What do you know how to do? See, money follows value. So if you want to make more money, you have to create, your income is in direct proportion to the value that you bring to the marketplace. Right. And so if you're not making enough money, that means you don't know how to solve big enough problems for people. Right. And money is a result of creating value in the marketplace. And then the three is your network. You know, who do you know, who knows you, and who can you solve those problems for? And then we believe your number one investment is your business. Right. And so, and we teach people there's 4 asset classes in investing: business, real estate, paper, and commodities. And then you've got to find what you like. I don't tell people what to invest in. My job is to make sure that you are protected, that you know how to manage your cash flow, that you're protected, that you're liquid, and you understand the difference between an asset and a liability. And now you have the capital. Now you're going to go buy stuff that makes money. That's not my job. I don't do that. That's why I let my investment license go. I don't give investment advice. Okay. You are your best financial advisor. So you need to invest in between your 2 ears. And then if you can tell me how it works, then have at it. You know what I mean? But if you can't tell me, how does it work? Well, I'm doing, I got my money in this XYZ fund. Who's the manager of that fund? What stocks are they on? You know what I mean? And so, because everybody wants an easy button, they don't want to think. So when you are,
because in my experience, people are out there chasing lottery tickets.
Yes,
and that's kind of what the problem is: chasing a lottery ticket.
Yes, and so we have to, so I love the By the Hood University. So you have to learn how to do stuff, right? Security is the ability to produce, and so if you knew how to make money, that's why I tell kids. Because somebody was in class, they're talking about, yeah, so-and-so's going to raise minimum wage. I says, that is stupid. See, when I hear a politician say, for example, just to talk about why economics is important, so that you can know. So you don't, what's that Eddie Murphy thing? Don't fall for the banana tailpipe, right? Raising minimum wages is this. So this is not Curtis' opinion. This is fact. This is like gravity. Okay, it is stupid, but that's opinion. But it causes higher unemployment. It's discriminatory. Minimum wage law. Okay, it's discriminatory, and it causes higher unemployment. Okay, so that is fact. That is an economic fact. But see, so when I hear people talk about we're going to raise that, I said, listen, y'all don't want that. I said, listen, see, I've always been on the other side of that because my parents I've always been the employer. So I have a different perspective. I tell people, look, think like an employer, then tell me why I said what I just said. See, let's say you don't know how to do anything, but I like you. I'm willing to give you a shot. I'm going to give you $5 an hour. This is what we did with my family on the supermarket, right? And we just pay them. And because you got to have your first job first. See, if you're 35 and you need minimum wage, people got to earn a living wage, you got other problems. That means you don't have any skills. Okay. And so what happens is you have to learn how to get up, be somewhere, be on time, pants up around your waist. I mean, you got to know how to do that first, right? You got to have your first job first at 8, 9, 10, 11, 12. You know what I mean? And so then what happens is, but let's say there's a law passed. Listen, I got to pay you $15 an hour. Are you worth, at this point, $15 an hour? No. So guess what? It discriminates you because you have low skills. So now I gotta go because you don't create $15 an hour worth of output for me, right?
Hmm.
So either I gotta raise my prices, I've got to go get somebody that if I'm paying you 15, you need to make me 30 at least.
Yeah.
You see, I mean, most people don't want to get. See, I don't know if that's. I'm not politically correct, but this is the facts, right? And so this is what I tell, like, because I do these trainings for young people for Urban Affairs Coalition, and I've done Ready, Willing, and Able, and
Hmm.
ex offenders. Listen, this is how the world works. So I can give it to you straight, or I can blow smoke up your butt. What do you want?
Hmm.
Okay.
Yeah.
And so the thing is, so I said, listen, your income is a direct proportion to the value you bring to the marketplace. You can reel me back in if you want. And the the question is, can you make yourself more valuable? Is what I'll ask them. And they'll go, yeah. I go, how? And they'll start rattling off, I could do this, I could do that. Some of them were just in this apprentice program that I was, teaching these young guys on, and they went through past the carpenter, the electrician, the plumber exam. And the people I taught last year, they all starting out at like 19, 20 with no student loan debt at 19, what is the apprentice rate? 19.30 an hour?
With no student
Getting
loan, that's
just no noon debt.
that's a nice start.
Right, 40, if they work all year long, if they only lay off 40 something $1,000 a year with no debt, a lot of them are still living at home, and I got them saving 25% of every check they make.
Yeah, listen, that's an amazing
10-1.
start. But you know what? To your point though, the money has to come from somewhere. So if you're not able to generate that kind of value, where's the money going to come from, right? So that's kind of what it boils down to. When you talk about those wages, right? You have to be able to generate that kind of output. Like you have to be able to kind of like pay for your own job, so to speak. Um, but yeah, but that's interesting. So let me ask you this question, right? So now that you've come through this entire journey, with insurance, reading, learning how to become your own bank, learning the principles of philosophy, learning all these things. And now you're teaching. You call yourself an educator. You're educating others. You have your own platform. Doing this. What does the future hold for you? What are some of the things that you're looking to do in the future?
A couple of well, it's really getting bigger at this. So we've actually started to begrudgingly expand my agency because I have advisors wanting to know what I'm doing and how's it work. So I've been teaching really like other people, real estate offices, like marketing and how to grow your business, because I figured out my number one problem was what helped me was I realized what business I was in, which was I was in the marketing business. So I could really do marketing consulting if I wanted to. And but so the growth is we have our own subscription service called the Money for Life Club, and I'm really trying to introduce people to this movement. Kind of like you, I want to educate people, and I want to kind of cancel out the noise of all the BS that they're hearing and just build a community of self-empowerment, self-direction, and leaving a legacy. And so that's my mission. I call it the 4 pillars of a strong personal economy, which is freedom from debt to others, ready cash when you need it, passive income, or really more accurately, asset-based income that you don't have to work for and you can't outlive, and a legacy of wealth and wisdom. So that's kind of like the end of the movie, so that we can kind of teach people to, build generational wealth. And so I'll never retire from that, because that's really what I want to do. So we're expanding, we're growing that. We're going to add on I have a great affinity because of my background for business owners. And I just feel like there's a lot of mediocre advice given, locally to business owners by and like different things I see out there. They're training business owners, but they're run by people with jobs. Like the executive director is this. They ain't never been an entrepreneur, giving, never worked without a net, giving advice to people that, you kind of got to eat what you kill. And so I'm working on a forum for that. Matter of fact, if you're not in business, you can't even get in. And because you don't get it. Most business people feel like they're hunted by a wolf they can't see, right? They have all the pressures. They got to make payroll. They got this and that. They got tax stuff. They've got if you got brick and mortar,
Yeah, see,
you got all this stuff.
those are the parts of business that most people don't talk about. They talk about the beautiful parts, but not the stress that comes with being in business for yourself.
Yes, and you have to be able to see that part of the personal development, because you got to become mentally tougher.
Okay.
With that, you have to have the ability to not need approval from other people.
Mm-hmm. Gotcha.
That's why it goes back to you got to, I'm really controlling of my environment. I do this with our kids, is, who you watch, hang around, listen to. So you've got to get, entrepreneurship is lonely, right? And so sometimes you might have a spouse that don't understand what you do. So you've got to get around other people that are on that journey, that will encourage you, that understands that, it's painful now, but you got to work through it. But you also have to work with what I call accurate information.
Yep. Well, let me ask you this question.
Yeah.
I have a couple more questions before we get out of here.
Yeah.
The first one is this: along this journey that you've went down that led you to where you are today, what has been the biggest hurdle that you've had to climb, or something you had to overcome to get you to where you are now?
I was myself. Okay.
What do you mean by that when you say yourself? What about yourself?
So because I started out as introverted. I thought, certain people wouldn't do business with me that, didn't look like me, which was not true. And I never had that feeling that I couldn't do something because I was Black, because my parents didn't play that. It's like, you can do whatever you want to do. So I didn't have that, but I had to, I guess, work. I didn't really have a self-esteem problem, but I was not any
So
good.
it sounds like you're saying self-confidence, like a confidence.
Yeah, well, no, if you knew me, confidence wasn't a problem for me. I was a ball player, right?
Okay, so what is it?
I just,
It
it was skills. I didn't have, it was really skill development. I didn't have the skills necessary to make $100,000 or $200,000 of the money that I wanted to have. So I had to grow into the skills. I had to learn the right stuff. A lot of the stuff that the industry teaches you on how to do business is bad information, because they teach you to beat the bushes and prospect. And I don't make many outbound calls. People come to me, right? And so I've learned how to develop a system where people call me and ask to qualify to see if they can work with me. So that was a game changer for me once I learned direct response, educational based marketing.
Okay.
So I don't chase people around. And that's really taken me about so I've really discovered that, and really 10 years ago, but I really didn't start to understand it and implement it for about 4 or 5. And that has been the game changer. But I had to get to that point, get to the confidence, get the experience. One of the things that helped me is I wasn't afraid to try stuff. A lot of people want all the lights to be green before they leave the house. And one of the things that you've got to do is, I always tell people, I tell new people in business, activity produces knowledge. Knowledge does not produce activity. So you got to go, Emerson said, if you want the power, you have to do the thing. So I was never afraid to try it, mess up, get bloody, and come back and try it again, because I would always course correct, and okay, well, that didn't work. Let me get better at this. Let me say this a different way, and I would always learning, and I always studied other people. Right. So I always modeled. I was really good at looking at people, how they were winning, and I would dissect what is the essence of their business and how can I apply some of that to my business. I was like that since I played ball. Oh, show me that move again. I was working this camp up in New England for the Celtics, Red Auerbach's camp, and this guy who plays for the University of Massachusetts, he was beating me with some move. I was like, show me that. They would play one-on-one every day when the counselors play ball, and by the last day of camp, I beat him with the move he showed me. Right? I was like, thank you very much. And so I play basketball. One of the things that, like, I used to coach travel soccer, and the main thing I would teach people, and I think this applies to business, you have to have the will to prepare to win. Right? So you have to do the work. You have to do the study. You've got to practice. You're going to get bloodied. And I think I got that from sports. And then just being able to stay in it. One of the things my dad shared with me, well, this is helpful, is that it takes 2 to 5 years to build a business. And I've heard that from the time I was 7. So most people don't give their efforts time to compound.
Mm-hmm.
And so I feel like the future is, I really want to begin to teach people those lessons. I think there's,
That's real interesting you say that, because throughout this conversation, it just occurred to me, right? So I always talk about discipline,
yeah,
but it just, just in this conversation, I'm thinking about patience and how important patience is, because when it comes to even investing or specific instruments that you may use,
yep,
we talked
yep,
about people always chasing a lottery ticket.
yep,
And the point you just made is, outside of just the investing piece, people working on their own business are trying to do things so they don't even give themselves a chance.
right.
So that patience is also key.
It's the patience. It's focused on getting better. You've got to work at getting better. You can't rest on your laurels. You only coast downhill. Okay.
Mm.
And so here's the other thing. I People will always want to send money. And so this is when you get advice from a typical financial world. You got a business, right, that you understand that you could control. You don't need to send money to somebody else's business.
Gotcha.
You don't even know. I had a client, she's got, I don't know, 50, 60 grand. I had told her this story. So this is what I'll talk about. So even what I'm talking about is bigger than insurance. It's not just insurance, right?
Mm-hmm.
And so, but what happens is, we had a person, the mentor and kind of my coach, was showing me an example of a dentist that we teach people to invest in themselves. So he showed me this guy's P&L from 2019. He had paid himself from his dental practice like $175,000, and he had a net profit from his P&L of like $510,000, right? So he invested 20 grand into like this practice management system that took him through the year. So in 2020, when he did his 2020, like last December's profit and loss, his salary that he paid himself out of his practice doubled to 300,000.
Mm-hmm.
His net profit was up to like $1.2 million after
Wow.
all the expenses, after whatever. And he was buying another dental practice, in the process of buying another dental practice. So now he's learned stuff that he could take and apply to that new practice
That's because he invested back into his business.
and himself and
Yeah.
back into his business, right? And see, so what ROI is that? And you're going to tell me you want to leave your business? I had a client say, what do I do with this money? I want to get into real estate. I said, listen, you don't need to do none of that crap, okay? You need to invest in your business.
Mm-hmm.
And so she called me like a week later after I told her the other story. She goes, yeah, I just found this, I talked to her this morning. I just found this firm that helps, physicians, grow their practice. And she said, well, it costs X. And she said, well, they're going to promise me, X amount of clients, but they're teaching her the marketing platform. They're not just giving her a done for you system, which is a mistake. See, people don't want to get in and learn stuff. They just want, well, can you do social media? Can you get me some leads off of Facebook, whatever? That's not marketing. Okay. Yeah. That's a channel.
Mm-hmm.
And so all that branding, you don't need branding, you need sales. See, all people tell you, I could do another talk on marketing, all the BS that goes on out there. And I don't need no branding. I'm not, if I had a Practical Wealth blimp over the Super Bowl, that nobody would know to call me to, hey, I need a financial plan, and so people will get a Goodyear blimp. Nobody's looking at the Goodyear blimp going, hey, I had to run down to Goodyear and get me some tires,
No,
so they have money to waste like that. You need a return on your investment like next month, this month. And so you can't do that, so it's little stuff like that. But see, so when you learn that stuff, then you put your money into what you understand, you'll get multiples of return in sending even to a SEP or some mutual fund or qualified plan where you don't even know the fund manager, where you can put it in. I'd rather have you spend $200 a month in Facebook ads than I would have you send it to a Roth.
Mm-hmm.
Because your ROI is better because you can control it. So it's a point when you do that, but you're not there. Most of you aren't there yet. You don't have 6 months of cash, 12 months of cash. People say, oh, I got 10 grand. What should I do? This guy came, my wife is an attorney. He goes, well, I have $10,000. What should I be investing in? I says, well, if you gave me the 10,000 to do something with for you, how much would you have left? He goes, nothing. That's all my money. I said, well, nothing then. You can't do anything. You don't have any money yet.
You need to get your reserves up.
Right. Get your reserves up. I can't do anything.
Yeah. Well, let me ask you this question, because I could tell through this conversation that, you're big into self-help and also reading. So
Yes.
I'd like to know, and I know you probably, because you read a lot of books. Give me your top 5 though. What are the top 5 books that help shape who you are?
Good question. So I would say Rich Dad Poor Dad.
Mm-hmm.
I would say I would work your way through the series, but it started with that, and then probably Who Took My Money is one of my favorite ones of him, where
Okay.
we get into the velocity method.
You talking about from Kiyosaki?
From Kiyosaki.
Actually, my favorite Kiyosaki book is Cash Flow Quadrant.
Yes, that changed it, because now, you know what, I'll put that one in there too, because that one helped me understand the game and where I was in the game, because I thought I was in business, but I was really self-employed.
Same here. Like that kind of, but and the funny thing about that is, different people take different things from that book. What I took from that book, even understanding where you are in the quadrant, is that, the objective is I, but you can be an I from any of the other quadrants.
Yes. You can be in all 4. You can be in all 4.
And that's kind of what I took from it. I'm like, okay, so you could actually be an I, even though.
But the game is on the BI. So I was at a conference, and I had lunch with Tom Wheelwright, which is his accountant, right?
Mm-hmm.
And he was saying, listen, the E's pay 40% in taxes, right?
Yep.
The S is self-employed is like 60%. Because if you're a sole proprietor, you pay your Social Security tax and for yourself, and you pay the employer what the employer paid on you. So your taxes actually go up. Yeah. A lot of people don't realize, right? B's pay 20 and I's pay 0. So like when I tell my daughter, I'll say, listen, so when you're talking to somebody, here's another way to look at it. Where is their point of view coming from? If I look at politicians, I'll say, where are they? Are they E's, S's, or B, or an I? And see, so what I do, I can tell where they're coming from. So I align my interests, so I can kind of tell where they're going to go philosophically. Mm-hmm. And then now I'm looking at that's why you have to understand economics, because you can kind of see the tide coming once you understand what you're looking at. See, most people are not strategic enough. Okay. And they're just letting stuff happen to them, but you can see it coming a mile away, and so you got to prepare yourself and protect yourself, and then prepare yourself for opportunities, because everything will always create opportunities if you're ready for it. So you've got to learn to think strategically. I would say, look at my bookshelf, Richest Man in Babylon.
Yeah, George Clason. Yep.
Is my basically I teach chapter 2 of that. That's my business. Part of all your earnings is key. Budget thy expenses. Make thy gold multiply. Make all of your home a profitable investment. Guard your treasure from loss. Ensure future income, right? And increase thy ability to earn. Okay, that's all I do.
Yeah. Richest Man in Babylon.
So see, those are principles. You see what I mean? The 10X rules. Grant Cardone's a newer one I like. Mm-hmm. And I tell you one now. I just finished. It's so many, because I read a book a week, but all the Russell Brunson stuff.
Yeah, marketing. Yeah, okay.
Expert secrets, .com secrets, traffic secrets.
Yep.
And then I would say the Renegade Millionaire by Dan Kennedy. I just finished that. Yeah,
so you got a bunch of them. But if someone and nailed you down and said, "What is your number one?" I guess that would be Rich Dad Poor Dad.
Yes.
If you had to just give one,
I had to nail it down to start you on the path you need to go down. Rich Dad Poor Dad, Cash Flow Quadrants.
Yeah. Okay.
What kind of, because Cash Flow Quadrants is about, he talks about is be, do, have. Mm-hmm. And so it's about being. See, most people want the have, which are the tactics, and they want to know what to do so they can have, but it's all being in business or being a credit investor and doing what you do in real estate is about being. Yep. First. Right. Yeah. And so that's major right there. See, so that's why it starts up here.
That's why I like when you said that. It's about becoming something. It's not because a lot of times we focus on the instruments, but not becoming an actual investor. Because when you become an investor, that's when you have that matrix moment. You see the entire world different.
And it's not risky. See, being investing is not risky. The risk lies with the investor not knowing what they're doing.
I think I want to end with that one. Cause that's a major line right there. I like that. Well, Kurt, listen, I just want to say thank you for your time. Thank you for sharing your wisdom. And I definitely appreciate what you got going on. I want to make sure I put links to everything that you got going on within the description so our audience can check out what you got, and follow you and along your journey. Cause continue to do what you do and teach folks
Yeah, please check out the Practical Wealth Show.
Mm-hmm.
I would subscribe to our YouTube. I'm trying to get more active on Instagram.
Okay.
But connect me on LinkedIn. But I have a gift if you don't mind, I have a report called Creating Wealth with the Velocity of Money. So where we introduce people to that velocity method.
Mm-hmm.
And so if they will text, you can type this in so that I had a short code, but they're about to go away. So I'm going to give you the number.
So what is it?
1-833.
Okay.
422.
0250.
Okay. And text P Wealth, PWEALTH.
All right. So let me pull that up, and I'll put that for those watching. If you're watching the video, you'll see it at the bottom of the screen. It's 1-833-422-0250.
And the keyword is P Wealth.
And the keyword is P Wealth. Let me add that to it. P Wealth. One word or two words?
One word.
All right, got you. So, and I'll repeat that as well for the folks that are might be listening to the audio version of this. That number is 1-833-422-0250, and the keyword is P Wealth, and you'll see it across the screen if you're watching the video. So make sure you check out what Kurt's got going on. You can get that free guide right there. Kurt, just want to say thank you again. Appreciate your time. And we'll have you back in the future. But I just want to say, continue to do what you do for the people.
Anytime. And I appreciate you having me and allowing me to go on I call it Curtis rant.
Oh, listen. I love that, because we're talking about things that need to be talked about, because that idea of becoming an investor, I think, is very important.
Yeah.
Because we focus on the real estate, we focus on the stock market, we focus on the insurance, we focus on all the products, but not the idea of actually becoming. And I think that's a very powerful statement. So I love it. I love the Curtis rant, because it's needed. So just want to say thank you. And for the folks out there watching, do me a favor, make sure you subscribe to our channel. If you're listening to the audio podcast, subscribe there as well. Follow what Kurt's got going on. Continue to show us support as you continuously do. Want to say we appreciate you. And as we always say, it's not about how much money you make. It's about how much you keep. It elevates. And we shall see you guys on the next episode. Peace.
Thanks, everybody. Have a great day.